Good afternoon. It's Dustin with Highway One Capital. It is May 12th, right? Just afternoon. Uh, the equity markets are down today, fresh off of all-time highs. Actually, the Dow just turned green, um, with the S&P off about 30 and the Nasdaq down about 330 points. The markets this morning really reacted to a little bit of some stubborn inflation data and some disappointing news on the Iran proposal. There'd been some hopes that we were on the brink of a peace deal, and I know the president was waiting for the proposal from Iran, but looks like that's not going to happen. Really dashing hopes of a near-term end to the conflict and a reopening of the strait. So because of that, oil's back up over 100 and interest rates are up again. And then to make matters a little bit more challenging today, the inflation number, some inflation data was a little bit stubborn, a little bit higher than anticipated. But overall, equities have really responded quite well after the initial sell-off from the conflict. When you look at the numbers, the S&P is up 20% from the March lows, and that was the fastest surge really since the COVID rebound in 2020. And the market's rallying for good reasons. I mean, there's a lot behind it, but keep in mind that it's moving so fast that even the slightest disappointment could cause some outsized reactions. So we need to really keep focusing on longer term. We're looking at all the near term data and the events overseas and around, domestically as well. But we have to constantly weigh the opportunities versus the risk. And although Tim and I both remain constructive on risk assets, we have an eye on some of the risks out there, like stagflation risk, maybe a more hawkish Fed reacting to stubborn inflation, and potentially if this AI tailwind slows, that could really slow down the economy. Now, those three aren't our base cases, but they clearly have our attention. And like we said, things are moving so fast and appreciating so quickly that even a slight disappointment could cause a negative reaction. So the bond market, it's paying attention to those risks as well. As the 10 years back to about that 4.5% range that we've talked about, as we mentioned last week. I think we were 440. We're a little bit higher today. So it's getting near the top of our comfort zone before we think it could start having a negative impact on the economy. So but all good here. Portfolios are looking great, and we'll keep you posted next week as things develop. And as always, please feel free to reach out if any of you would like more detail on our forecast, our outlook, or any of your individual portfolios. So hope you all have a wonderful week. We look forward to seeing several of you at our client event on the rooftop at Lido House this weekend. Looks like we should have some nice Southern California spring weather, and we're going to have a lot of fun and as always, some really good conversation together. So we look forward to seeing you there. And just as always, a friendly reminder that every day is truly a blessing, and let's make sure that we enjoy it. Thank you.